Okay, it looks like we have a full house. So thank you everyone for joining us today. My name is Megan Lewis. I am the Public Funding Navigator here at Arts Alliance Illinois, and we're really excited about our program today. We're going to be talking about all things nonprofit theater tax credit. So let's go ahead and get started. Today's program about the Illinois Nonprofit Theater Tax Credit is a program of Arts Alliance Illinois and the League of Chicago Theaters. We've been working in partnership with this program. The Help Desk, which is bringing you this webinar today, provides direct support to creatives in finding, connecting with publicly available funding opportunities like this one. We're going to take a few minutes here at the beginning to share some information about Arts Alliance and the League, and then we're going to go ahead and dive into the main program, allowing for questions at the end. First off, though, let's meet the speakers we have today. We're really thrilled to have with us 4 speakers who are going to share their expertise and experience with the tax credit process. If we can go to the next slide. To start us off, we have Peter Hawley from the Illinois Film Office, who's going to give us an overview of the program and help field any questions that you have. Next up, we'll have Dr. Andrew Peters from the Danville Light Opera Company, who's going to talk about his experience with the application and documentation process. And he's joined by Dorina Towner, a CPA with Emerging Business Solutions, who will give some quick tips on how to make the audit process go as smoothly as possible. And then rounding out our program, we have Kenny Blaine, a tax broker with Credits and Incentives Corporation, who will help demystify the tax credit resale process so you can convert those credits into revenue for your company. And we do have time at the end reserved for question and answer from everybody. But before we get into the main program, I want to give a brief overview of Arts Alliance Illinois and our help desk, and then give the League of Chicago Theaters a chance to talk about their incredible organization. Next slide, please. So our mission at Arts Alliance is we are the statewide arts advocacy organization for Illinois, and our mission is to build the creative sector's power to improve the quality of life in communities statewide. We do this work through 5 key areas. We help the sector advocate for its policy and financial interests. We provide specific supports for creative workers so that they thrive in their work. We advance arts education for all Illinois K-12 students, regardless of their race, zip code, or income. We help the sector navigate public funding opportunities like the nonprofit theater tax credit. And we perform research that is needed for case making to help the public understand all the benefits that arts and culture bring to our communities. If we can move on to the next slide, that just summarizes all of this. Great, thanks. And then next is our Creative Worker Help Desk, which is a new program for us. We've recently expanded our help desk to include supports for creative workers, including employee readiness, coaching, accessing public benefits, and providing overall support for your professional journey. So to be able to reach our help desk, either the general help desk or the creative worker specific help desk, you can visit our website at artsalliance.org/support. And that link's getting dropped into the chat as well. And there you can access our running list of funding opportunities, our latest resources, and submit your questions to the help desk site. Before we get into the main program, I do want to invite Emily Dillard from the League of Chicago Theaters for a moment for some remarks. Emily?
Hello, everyone. I just want to send our sincere thanks from the League of Chicago Theaters. I'm just going to make it short and sweet because I know we have a lot on our docket today. But as many of you know, our executive director, Marissa Jones, is out on maternity leave. So in her absence, I just wanted to send our sincere thanks from the League of Chicago Theaters. Thank you to Lou Raisin, the Arts Alliance Illinois Film Office, and our lobbyist Chad for making all of this possible. And thank you all so much for being here today. Just our sincere thanks, and anyone I have forgotten to thank as well. Our sincere thanks and for letting us be here today. I'm sending it to Peter Hawley.
I'll jump in real quick, Emily, while we set up Peter's slides. So thank you so much for that. So yes, our first speaker today is going to be Peter Hawley with the Illinois Film Office. And Peter's going to be providing a broad overview of the Nonprofit Theater Tax Credit Program, how the application process works, and the steps that you need to take to go from production to tax credit certificate. So Peter, the floor is yours.
Hi, everybody. Good morning. Let me just rearrange. I've got a bunch of screens in front of me. I just have to rearrange so I can look at you and my slides. I'm Peter Hawley. I'm the director of the Illinois Film Office, though it should be called the Illinois Film and Live Theater Office.
Peter, just let me jump in real
Oh,
quick. We're not seeing your PowerPoint. We're seeing
uh, oh,
your personal screen.
oh, okay. Hold on. Let me do it again. Let me stop sharing. Thank you for telling me that. Uh, In theory, it should be sharing that. How's that? Any better?
Great, perfect.
Okay, all right, then I'm just not going to move screens around anymore. So
Okay.
anyway, as I was saying, my office has run the live theater tax credit program for several years, but until last year, it was only included really the Broadway and Chicago shows, and we had 6 or 8 applications a year. And now, as of the statute change in 2024, we have opened it up to nonprofit live theaters, and it's a $2 million capped program. I need to say, and the League of Theaters and Arts Alliance have heard me say this many times, though I've been a filmmaker for 40 years and I've been a college professor in the film space for 30 years, I go see more live theater than I go to see movies in a movie theater. And so, as on a personal level, I'm thrilled to be the guy who signs off on these tax credits. And so it's very exciting, and I hope the program grows. So I'm going to just do a quick overview of the program. It's a 20% tax credit on your qualified spending. And here's the qualified spending goes from pre-production, including but not limited to the writing of the script, casting, hiring. I'm not going to go read the whole thing. I can make this available to everybody. Actually, Megan has it already in a PDF format. She can send it out to the group. Includes up to $100,000 per Illinois resident, plus 15% additional for residents in high areas of unemployment. That's tied to census tract data. And it includes your Illinois vendors, goods, and services. And the credit can be transferred within 1 year of issuance. And we're going to talk about that part of it when Kenny starts up here. The big thing here is, as I said a moment ago, the live theater program is capped. The film program is uncapped. Last year, I signed off on $200 million of film tax credits. On the live theater side, for not-for-profit, I have a $2 million cap, at least this past year. And as you can see here, it's broken into tiers. So it's, if your operating annual budget is under $25,000, you're ineligible. But from 25,000 to 250,000, you're eligible up to $225,000 of tax credits, another $225,000 to 250 to $1 million operating budgets, then 250K to $1 million to 2.5 million. 2.5 million to 5 million is 300K, as is 5 million to 10 million. And for $10 million budgets or more, it's a $700,000 award. So it's how the statutes, I did not write the law, I just administer it, tried to make it equitable to people. Originally, when the law passed, and the reason it took a while to roll out was there were a couple of problems with the statute, and all my office could do would have been to deny every claim because of but for, and also it was first come, first serve for everybody. So one organization could have put in 7 applications and grabbed $2 million, and everyone else would have to go home. So it's very, very simple. Applications must be submitted 180 days prior to opening night, but no sooner than that. The minimum qualifying spend for the smallest tier is $10,000 of the production cost. You must be produced by a 501c3 that's been registered in Illinois for 5 years. And the productions must be at least 75 minutes of length, and the theater must have at least 75 seats. we've had a lot of discussion about this, and we've written some rules that are going through the rulemaking process. But you know, what if you're in an outdoor setting, you know, with no seats? You know, what 50 ticket sales? We're working through that, but right now the law says the theater must have 50 seats. So the application is pretty straightforward. You know, it's all available on our website. You have to go through all of these steps. I will let you look at the website and the application itself. You complete the application, you have to submit us the Secretary of State Certificate of Good Standing and the IRS 990 for the previous 4 years. You have to submit your proof of copyright, a contract signed, and then you need your IRS EIN assignment letter for first-time applicants only. And then a copy of your annual operating budget approved by your board. That is how we know what tier to put you in. And then claim the credit. We're going to talk further about this when Dorina and Kenny start talking. But you know, you will submit your claim through a CPA, a la someone like Dorina, and who the CPA will then submit it to us, and my office will review it, and then we will issue your credit. So once you get a credit, you will then transfer that credit, because in theory, the credit, since you're a not-for-profit, doesn't go to your Illinois tax liability because you won't have one, but there are many people and businesses around the state that do have a substantial tax liability to the state of Illinois. And again, Kenny and Dorina will talk further about this. And if you have any questions, Cesar Lopez, the hardest working man in my office, oversees both the film and the live theater tax credit program. We are going to bring on a live theater tax credit manager as well. That should be happening somewhere around the first of the year. And the general mailbox is livetheater@illinois.gov. If you go to that link, you will a woman named Caroline Namoda will answer it and answer any questions you have, or refer it to me or to Caesar. Those are the broad strokes. I don't want to get too bogged down in the details, because everyone has a slightly different point of view. You know, it's not one question fits every size. So if you have questions, either email Caroline or me, or if it's a general question, we can talk about it later on. So that is me, and I will now pass it on to Dr. Peters and Dorina.
Thanks, Peter. Yeah, a reminder for folks, if you have questions that are coming up, please put them into the Q&A. We'll be making sure and getting to those at the end of the program. So next up are Andrew Peters and Dorina Towner. So Andrew is the treasurer for the Danville Light Opera Company. It's a role he's had for 12 years. And he successfully received a tax credit for DLO, working with Dorina Towner of Emerging Business Solutions for the audit portion. So Andrew, what I'm wondering is if you can talk a little bit about your experience with the application and the documentation process, and really interested in hearing what parts of this went smoothly and how did you handle the more challenging parts of it?
Sure. Thanks, Megan. And thank you, Peter, for that overview. Just to give a little bit of background about our organization, DLO Musical Theater, as we're operating under the name of now, we're celebrating our 70th anniversary, and we're located in Danville, Illinois, which is best known as the hometown of Dick Van Dyke. A fact that you can't help but notice everywhere when you live here. But DLO is a community theater that has about $100,000 a year operating budget. Our shows tend to have about a $10,000 to $20,000 budget per production. So when we found out about this program through the emails from Arts Alliance, it seemed like a perfect fit. Now, we are an all-volunteer organization, and that includes myself and all the hours I put in as a board member, treasurer, webmaster, everything else. Lots of hats to wear. One thing that we, a lesson that we've learned along the way is, the more, if you will, rigorous requirements in terms of documentation, record keeping with this program compared with other kind of grants that we've received in the past. Now, I wanted to focus on things like, for example, the crew expenses, salary expenses. As an all-volunteer organization, we don't have any employees, we don't pay salaries. However, we do have volunteers who are musicians or um, production team staff who do receive an honorarium. And so, for purposes of this program, they're considered independent contractors, and those expenses do qualify under the program. However, also as an all volunteer organization, we don't usually keep the same kind of documentation that would just be assumed under uh, a a company that hires people on as employees. We don't have those things like tracking down their driver's licenses or state IDs. That was a little bit of a surprise as we started undergoing the audit process in conjunction with Ms. Towner's CPA office and her staff, who were just immensely helpful with walking us through this, along with, of course, all the help that we received from Megan and her staff at AAI. Um, so, what I would say is, if you have an all volunteer organization like ours, just be aware of some of those additional documentation requirements that you might not be accustomed to. Now, there are, of course, the templates that are available on the Film Office website for the crew diversity tracking sheets. So definitely download those, look at what needs to be done. All of those need to be filled out. They need to be signed by the people in question. And in an all-volunteer organization, this was like herding cats, trying to track folks down, get signatures. There were some people who, for privacy concerns, didn't even want to give us a copy of their driver's licenses. So any honorarium we gave them was not a qualified expense for this program because they wouldn't share that information. Okay, that's their right. But just to kind of give an idea on overall budget versus what qualifies as an expense for this program. I would say that was one of our biggest challenges, was doing the crew tracking. One of the other things, just to kind of point out from this sort of 30,000 foot perspective, now it may sound really obvious, and maybe it should have been, but perhaps it just went right over the head, is that word Illinois. When we talk about Illinois qualified expenses, when we talk about our show budgets or production budgets being in that $10,000 to $20,000 range, what are some of the biggest chunks of that budget? Well, they do include things like paying royalties to the publishers. Where do all the musical theater publishers live? In New York. So there is a big chunk of our budget that's not qualified for this program. We are also ordering costumes from various places online that are out of state. Okay, those are out the door too. So be aware when it talks about that minimum $10,000 budget for this program, that all has to be within the state of Illinois. And we were lucky in this sense that the production that we did this for, which was this spring's production of Into the Woods, had some unusually large technical expenses that we had that were all based in state. Because there were some shows that we've done in the past that may have had a $15,000 overall budget, but probably less than 10,000 of that would have been a qualified in-state Illinois expense. Even little things that, who would have thought? Danville is on the border with Indiana, and some of our staff and musicians live just 10 minutes away across the border in Covington, Indiana. Nope, that those those expenses for their honorarium as an independent contractor, not qualified. So, those are some of the lessons we learned as we were, kind of painstakingly going through this process, especially with the audit with Ms. Towner's organization. So, I wanted to pass it along then to Dorina and talking about a little bit more what that audit process is like.
Yeah, thank you for that, Andrew. So Dorina, can you share some tips as a CPA who has worked with many different companies for this tax credit program and the film one, the nonprofit theater, the live theater, and what in your experience has made the audit process go smoothly? If you're talking, Dorina, you're on mute.
That's from when you told me earlier. Okay, I'll recalibrate. Okay, this is Dorina Towner, Chief Operations Partner for Emerging Business Solutions. And I'm sure that Tanisha Crenshaw, who Andrew worked with on this production, is our film and now live theater production analyst. So across the board, like we've been doing the film tax credit process probably almost 18 years now. And like with Kenny on the broker side. But coming into the live theater arena now, across the board, the main thing is documentation. So that's the key to everything, having the proper documentation that's required, for the production. So clear documentation, proper receipts, proof of payment, and then just knowledge of what's qualified. So as Peter said, because there was somewhat of a delay in rolling it out, in February, then there were a lot of productions, scrambling to try to make this fiscal year. So, we also tried to assist by putting together step-by-step instructions, to provide to people. So the main thing is that in this, different from the film production, is that there are no they're like the talent component is not qualified for the live theater credit. So your crew individuals, as Andrew was indicating, there's certain documentation that we have to verify proof of Illinois residency for anyone that's considered crew, whether they're on payroll, whether they're independent contractors, and then the proper documentation to indicate, their positions and how many days they worked and so forth, because that makes us be in compliance with the requirements of the film office and theater office. And then the other, besides the crew, then the other components would be any vendor and petty cash expenses. And then, as Andrew indicated, those need to be provided by Illinois vendors. And then the documentation has to be clear and then be substantiated with, proper payment documentation. And then there's a format in which that information has to be presented. And so there's a spreadsheet template, and we provided that, and we can provide that as well as like Peter's office, but providing that information and then working, probably having just an initial conversation even before you start the project. And when you do your application process, because on the film side, we try to do that before production starts, because after the production is completed and you're trying to do the submission for the tax credit, it's harder to get information from people who've already left the project, so where you are aware of what is needed at the beginning and while the production is going on and on the ground, it's easier. So if you're able to engage with, whoever your CPA would be early, then that's always advantageous. So I'll stop there because I'm sure there'll be a lot of questions in the Q&A.
Yeah, and Doreen, if I could jump in
Yeah.
on that was a good point, because we had applied for this program on the very first day that it was eligible, I believe back in February, and our production took place in early May. We did not get confirmation that we were approved until a couple of weeks after the close of our production. But just because we had those guidelines in place, we did go ahead and fill out things like the crew tracking worksheets as we were going. So even if you're not don't get the official approval word yet, just start right away as if you were approved, because yeah, that would have been a lot harder to track everyone down after everyone's scattered to the four winds when the production is closed.
Yes.
I want to just add a comment about that. While Dr. Peters is correct about that, one of the issues was the application went live February 14th, and by midnight 05 on February 14th, we had 103 applications.
Yeah.
So we had, and we also have 300 film applications. And Caesar and Caroline and I have 3 brains between us, so it takes some time. Now but that said, we have worked through that, and now it's a rolling process. You saw the 180-degree thing, so it should be better. You should get that sooner moving forward. We're still working through APCs, that's the first part, and claims. But like I said, we're bringing on another person that will help it. We're also bringing on a temp that will help us as well. But I should also just say that almost every film production and 100% of all TV commercial productions do not get their APCs approvals until after they're done with production. A big film may get it a month into production, but it's just the nature of the beast. So I encourage everyone to just, if you are going to apply, start tracking everything. Work from the perspective that you believe you're going to get accepted. Just because if you don't work that way, you have to have the intention that you're going to get accepted. And so, that will help you quite a bit.
Thanks for that that tip, Peter. I think that's going to be really helpful for people to know to get started as soon as possible. Before we move on to Kenny, there is a question in the chat for Andrew. Someone's asking, how much of a tax credit did you get?
Oh, yes, thank you. Yeah, so we ended up, hopefully, with around a $3,400 tax credit. So the total budget for the production turned out to be just under 25,000. So, but again, because not all of those were Illinois expenses, not all of them were qualified expenses for other various reasons, that 24 or the 20% ended up being around the $3,400 mark. And now just keeping in mind also that the expense that we had in engaging Ms. Towner's firm, CPA firm, does qualify as an expense for purposes of this tax credit. So it's kind of like getting a 20% discount, if you will, on the CPA audit, since she's located within Illinois.
Yeah, that's a great point to make, Andrew. Think about it as a credit for the services. So thanks for that example of your experience in getting to the point where you got that $3,400 tax credit. Now we're going to pass it over to Kenny. So Kenny's going to talk to us about how we take that tax credit and turn it into cash. He's got extensive experience doing this with film, TV, and the live theater. And we've gotten a lot of questions in the help desk because folks have gotten those golden tickets and they want to turn them into some revenue for their companies. So we're really interested in hearing your advice on how to do this and how folks like Andrew, who have kind of a smaller dollar amount on that tax credit, how they can resell it and recoup as much as they can. So the floor is yours, Kenny.
Absolutely. And thank you, Megan. Hello to everybody that's here today. So just a quick background. I have been in the transferable state tax credit market space for 18 years this year. We work all over the country in about 15 states that have transferable tax credits for film and TV, and then a variety of other states that also have different types of tax credit programs extending from environmental cleanup, farming, environmentally friendly farming practices, historic housing rehabilitation. So now we have the Illinois live theater tax credit, and Illinois historically has had one of the very best tax credit programs in the country for film, TV, and commercial production. So as part of my active role in Credits and Incentives Corp, I have always worked with the Illinois tax credit. It's been my biggest space within my company and within my team. Illinois has tremendous success with major studio production. So we do some of those throughout the year, but primarily I have found a niche working with commercial productions in the state of Illinois. And there are, as Peter could probably tell you, hundreds of them a year. So we work with a variety of tax credits that range anywhere from $10,000, $15,000 up to several $100,000 in that space. And then the studios get multi-million-dollar tax credits. Most of them end up using their own. But the beauty of working with smaller tax credits and what we've kind of established over the years is that we have tax credit buyers that come in looking for credits. And I've set up a system where they can buy a bundle of them, in quotes, each and every month, typically. And so we work with corporations in the state of Illinois, high net worth individuals, basically any company or individual that pays a substantial amount of Illinois income tax. And there are a lot of them, which is great. The market is well supported. And how we operate traditionally is that we would sign up anybody that has a tax credit that needs to be sold in order to convert that piece of paper into cash. We then work to lock you in with a company or an individual that's committed to purchasing your credit. And then once that is all situated, we complete the Illinois tax credit transfer form, either for, in this case, for live theater, which we keep on file, and we do that for you. That gets submitted to the state of Illinois, to the film office. I think I work with Caroline on those. At that point, the state will then issue a transfer certificate. The buyer for the credit is then obligated to fulfill their duty in paying you for it. So the market in Illinois varies. We kind of work off of a range. It's us, it's our competition. It's really just what the market supports. Anywhere from, based on size of the credit, we see anywhere from the high 80s all the way up to close to 94 cents on the dollar. Of course, it's a sliding scale, typically based on the size of your credit. So the million and up crowd typically sees that higher range of, the mid 90s, kind of in that 93, 94 range. And then anything under $1 million, maybe in like the 92, 93 net per tax credit dollar. And then under 100,000, typically closer to 90 within that range. So we typically don't go under 90 unless it's super small, and it's just the idea behind it is that that difference between the net sale price that you're getting and what the buyer pays and the actual discounted rate of the credit. The buyer, in order to grab their attention and their interest in the tax credit, needs to have a little bit of a discount, which translates to a tax savings after they hold the tax credit for a period of months to a year plus, and then apply it on their state tax return. So for example, right now, we're seeing 2025 tax credits come in. The buyers of these credits actually have to factor in the value of the credit and the value of the discount, and basically their rate of return from the point that they purchase the credit to when they actually use that tax credit on their 2025 tax return, which is typically filed for calendar year taxpayers in April or even October on extension of next year. So that's the reason credits are discounted in any state, and particularly in Illinois. In Illinois, we're very lucky. We do have really the highest market for tax credits out of most of the states that offer film credits in the country. So we're already kind of trailing on with the film tax credit market that's already been established. So typical turnaround time for your tax credit transfer, once you have that piece of paper, I see, roughly around 2 weeks average from our process of start to finish and locking in a buyer, getting everything signed, submitted to the state. One other thing too, which Peter's office does really well, is getting those transfers turned around very quickly, typically within 1 to 2 business days. So I think that's kind of the gist of it. Megan, if we could go on to the question period, or if there's anything else you want me to address.
No, I think that all sounds great. I think we've got a lot of questions, so we can go ahead and move on to that. I just want to thank everybody for all of your information you shared, your experiences. I think it's really helpful for our audience to really see the whole gamut and hear what folks have addressed.
Yeah, and I see a lot of questions coming in, and I can help answer some as they're.
Great.
And can I
Yeah.
add something, Megan, before?
Sure.
Piggyback off of what Kenny just said.
Absolutely.
What I recommend, in addition to once we complete the agreed upon procedures engagement and submit the report to the film office, we advise our clients, because there's a period of time that it takes for them to review, but we advise our clients that, we give them a copy of the report that we submit to the film office. So versus waiting, whatever the period, the 60 to 90 days, for the film office to complete their review, to start engaging with the tax credit broker, at that time, because you can provide them, so they have an estimate of what the credit is going to be, because it usually comes out, right about at that exact amount, or if there's a difference, it's a slight difference. And then that way you're not 90 days behind, to start that transfer process. So just keep that in mind, because then as you're doing your timeline, developing your timeline, that's what we recommend. And it's been, I think, helpful for most of the applicants. So I just wanted to add that.
Yeah, that's a great point, Dorina. And you can contact me, or any other broker at any point during the process to at least get our engagement out of the way. And then, as I said, we work with buyers on a monthly rolling basis to fulfill their tax liability as best we can with other credits. So we always have an active buyer or two that we can do credits with. And it can be large, it can be small, because we are working on with credits every single month. We can lump yours in with whichever buyer is available at that time.
Great. So yes, we do have a lot of questions in the chat. I'm going to need to back it up to Peter, because there's a few questions about eligibility and some clarifications. One of the questions that's come up is to understand better what that 180-day timeline is.
Yeah.
Folks want to understand how that affects when they start to collect things. Does that happen for every production, all that kind of stuff?
Sure. So yeah, I saw a couple of questions about the 180 days in the queue in the chat. So that is put in place for a couple of reasons. Number one is this is a capped program. Like I said earlier, the film program is uncapped. So if it was uncapped, it's rolling and going, but because this is right now $2 million a year, we had to put some safeguards in, because I can imagine a theater company that knows all of the productions they're going to have this year, next year, and probably the following year. And if we didn't put in a 180-day, cutoff before your opening night, you could apply today, and you would just take up all of those credits, and we would expire everything else. So when do we send in an application for 20? So I will just back time from 180 days of opening night, and you can send it in then. That is that answer. So that is the reason why. And because if not, when we first got this plan, the statute, one big theater company could have, submitted 10 applications at midnight on February 14th, and that would have taken all the money from everyone else, just because they know 2 years down the road how long, have all their productions. So we put in 180 days before.
Yep. And the 180 days, if I understand correctly, that's the maximum amount of time out from when you open. Right. So you're not looking for people to give their expenses 180 days beforehand.
That's just the application part. That's just the front part.
That's just the application part, right?
I mean, you're not going to have all of your expenses. You'll have an estimate. I'm sure you've budgeted how much your production is going to be, but you won't have all the final numbers until it's all said and done.
Right.
But you
But
can,
if you're within that 180 days period, you're good to
Yeah.
go with your
Yeah.
application. Yeah. And applications, this is a rolling program, so there is no like opening date and closing date for this.
but you
The-
can apply after 180 days. Again, I'm just reading this new
Yes.
question here. So, but again, it's a waiting in line process. So if
Right.
you can apply up to opening night, but that means all the other theaters could get ahead of you on that.
Right.
It is a bit of a
Right.
race. That is why on February 14th at between midnight and 12:05, we had 105 or something like that applications to get in.
Yep.
I can also tell you this because it seems like, just looking at the list here, that these are relatively smaller theaters compared to some of the bigger theaters. The number one tier, the largest tier, has already eaten up their tax credit money for a couple of years. So they're now waiting in line for that money. We have not yet issued those credits. We're waiting for the claims, but we've issued the APC, so we know this theater is in line to get a credit of a certain size.
Right. Right. And speaking to that, the whole idea that a theater company to be eligible has to have been a nonprofit for at least 5 years.
Correct.
Excuse me. Can a fiscally sponsored nonprofit, does that count as part of the
I
5
think
years?
I would have to check with legal on that, but I would believe that they could apply as the applicant, because they would have to show us that the fiscal sponsor, they could be the applicant.
The
You know,
fiscal
a lot
sponsor
of-
would be the applicant.
Yeah, but
Okay.
then it has to be. I've got to check that, to be very honest, because the fiscal sponsor may not actually have a theater, and then you've got to have the 50-seat theater. But I think there's a workaround on that.
Okay.
50-seat
Great.
theater.
Great. Let's see. There's a lot of questions about eligibility. Are orchestras eligible, and orchestras that present ballet?
Yeah, so I was, as Kenny was talking, I grabbed a couple of things. So I'm going to this is what looks like this is what a transferred certificate looks like. I am going to block the amount here, but we've transferred it. It's a letter with my name on it, right? And this was, I have signed off on several, here's Ballet 58 NFP. So a ballet performance has, I've signed off on dance. It's all in the rules right now. So we're working through that, because you have to submit a script. And
Right.
that script is a blueprint. And we've had, I'm sure Megan and the help desk has lots of other information. This question has come up for 6-9 months probably.
Yep. And we do in the help desk have put together a tip sheet for the application process, for the documentation process. So if you come to the help desk, I'm happy to send that over to folks, which really helps to kind of hit all the high points. Another question, Peter, you're going to get a lot. Do public schools qualify?
That's a new one. I've got to check on that. So if for like a high school play, I'm imagining something like that.
Yeah, I'm looking back in the chat for the question. See if they popped it back in. Nope. Let's see. If the person who asked this question, if you want to unmute, that would be fine. If we can unmute them. Okay.
But yeah, I would have to look into that, because I'm just using a corollary for film. The Illinois tourism TV commercials are not eligible for film tax credits.
Okay.
Because the state is actually paying them. So in theory, the state is actually paying for the budget of that, and in theory,
Right.
a public school, the state is actually funding that school in its own way. I have to look into that. That's a new question to me. But I'm assuming, and I'm guessing high school, but I guess it could be a public college too. It could be a community college, a state university.
Yeah.
But because
And
it's coming out of the same pocket, I don't think we would double dip.
Yeah, that's what we've run into, is we've had questions from theater programs or theaters that are embedded within a university. So they're kind of a separate 501c3, but then they're not. So Yeah, that's where that gets
Yeah.
tricky.
I will,
Um,
I will tell you that there, I know of a theater that is closely tied to a university here. It's not a public university, but they are eligible and they're separate, as Megan just alluded to, they're separate 501(c)(3)s from the university and the theater company.
Right. And then also, are writing expenses eligible for the person who writes the play, and rental expenses, are they eligible?
If they're Illinois, if they're Illinois writers, and like if I'm an Illinois resident and if I wrote the play, my fee would be included. And if it was an Illinois vendor renting props, set, deck, that kind of stuff, that's included.
Okay. For Dorina, I think, but Peter, you might chime in as well. When you're submitting information to your CPA, do you need to submit contracts from the contractors? Because they are crew and not vendors.
You said contracts from,
Do you need to submit contracts from your contractors who you're working with for crew folks who you've hired on a contract basis? Do you need to
Yeah.
submit those contracts to the CPA?
yeah, that's the equivalent. If it's a crew related position, so like a writer or, or anything, then they would be independent contractors when, whether they have a a deal memo or just an agreement, then they would have to provide that as the documentation with, the rate, the fees and dates and everything that they worked, or, an invoice. And then also, but they would also have to provide the Illinois ID, for Illinois residency verification, because they're considered crew type positions. But an actual vendor, we don't have, collect IDs for the vendors, that provide, like Peter was saying, set deck rentals and, venue rentals and equipment rentals, because those are like companies. But any of the crew type positions, then yeah, whether it's a contract, like I said, or a deal memo invoice, do we need that type of documentation for those people? And then proof
Great.
of payment for everybody,
Yep.
so, yeah.
Yep.
Mhm.
Great. Question for you, Kenny. Can we sell the tax credit to a board member? And kind of related to that, what are the ways to be able to transfer the tax credit without going through a broker? So what are
Sure,
like
sure.
the
So
direct sale?
first, I think an answer to the board member question would probably to have board approval from everyone, in the spirit of transparency, right? I mean, I don't think there's anything that the state would do to prevent from selling to a tax-paying board member on a personal level. So that's absolutely doable. And we do see that sometimes where, an owner of a company may use a credit or one of their investors may have a tax liability. You may have a donor or a sponsor of your production that pays tax in Illinois that you can flow the credit up to. And yes, absolutely, you don't need to ever use a broker to file your tax credits, to transfer them. We're here as a resource. We are proponents of the live theater tax credit program and for maintaining and keeping a strong tax credit marketplace. So always do check with us on pricing or guidelines there. If you have someone or a private company or individual that's looking to purchase your tax credit, we're always available as a resource to even guide you through that. If not, I would say you can also reach out to Caroline and Peter's office, at the film office to just obtain the rules for transferring the tax credit, get a copy of the tax credit transfer form. We have that on file as well. And if there's a situation too where you just need a little bit of assistance, you can always reach out.
Right.
Yeah,
Megan, can I,
Megan,
go ahead, please. Can I
I was
jump
gonna
in?
say,
Because
Megan,
Tanisha just, Tanisha Crenshaw on our team, she just texted me, was like, please explain what Illinois IDs, qualify, because a lot of people, that's a major component.
Yep.
So there are only 4 pieces of Illinois ID that will qualify, for verification of Illinois residency. So it's a valid Illinois driver's license, state ID, firearms card, or marijuana card, that are issued, for prior to that person starting work on the production. So those are the only ones. And so they need a copy of that. And if it's someone on payroll or where they are using I-9s for verification, then they need to document that information in section B, of the I-9. But a lot of people say, well, can I get a lease or, a bank statement? None of those. I'm just making that because that's where a lot of people do lose money across the board, is on the labor component, because they don't have the right type of, documentation. So it's those 4 pieces of ID only. And people say a marijuana card, yes, because it's issued by a state agency, so those are the only 4 IDs that actually qualify for a residency. Thank you, Tanisha. Okay, she's on the call. So yeah.
Peter, did you have something to
Yeah, so
add?
I just wanted to echo what Kenny was saying, that we, and Megan has heard me say this in the meetings we've had many times, that I would think that some subscribers or, supporters of an individual theater would be eligible for a tax credit. I mean, Dr. Peters, I think you said you're expecting your credit to be around $3,400 or something like that. There are plenty of people that have a $3,400 tax liability to the state of Illinois, for personal taxes or companies. So I think that there are, for smaller numbers, I think there are people out there that would be able to take advantage.
Yep. So a question about whether or not a 501c3 can take advantage of it themselves. Someone says that they have a tax liability annually for unrelated business income. Could they apply those tax credits to that liability? This is from their concessions, I believe.
They have a state of Illinois tax liability.
That's what I'm understanding, because it says unrelated business income from their bar. So
I think if it's considered Illinois state income tax, then yes, but if
Yeah.
it's any other types of taxes, depending on how
Yeah,
it's
if it's going to say you
classified,
can't use it for your federal tax.
no, exactly.
right.
Right. I mean, I do know that we have issued tax credits for film or TV commercials, rather, to hospitals, and they're
Mhm.
in the 501c3.
That's right.
So someone's asking, what's a good percentage to keep from a tax credit sale through a broker? Like what would somebody say, I'm getting a good deal on my sale?
Yeah, so I kind of covered that a little bit. So we typically on average see a sliding scale of anywhere from 90 to 94. If you're getting, a $10,000 tax credit, probably closer to 90% of the face value of your credit. Mostly studios and multi-million-dollar tax credits receive closer to that 93, 94 range, but definitely I would budget to expect at least 90.
Yeah,
Okay.
that's my rule of thumb too.
Yeah.
Okay. And wondering about suggestions on selling some of these smaller credits that are less than, say, 90K. Someone says theirs is approximately 40,000, or I mean, sorry, 20,000.
We like smaller credits. I don't discriminate, so I think that's part of why I work well here. We do our business in volume. So this month, for example, on the film side, I'm working with 11 sellers. They're mostly commercials. They're anywhere from 20,000 to 200,000. And I have one buyer said, "Hey, I've got these 11 tax credits that were just recently approved. Um, will you take them all?" And so we do a contract with each and every individual seller, a transfer form with each and every individual seller. Those sellers, regardless of what their size is, get the benefit of a stronger price point and the ability to move quickly. So, it really, we do this almost every single month. I kind of keep a running batch, close them out, and it moves very smoothly. So, I think, size really isn't an issue. There are buyers and there are brokers for every price point and every size point on the tax credit.
So now we have folks asking, does the broker take a cut, and what's the range of the broker's fee?
Yes, so absolutely. So we earn the difference between what the buyer pays and what this net price is. So typically anywhere between so buyers pay probably 94 to 95 range. So if it's a $10,000 credit and the production's earning 90, You know, and we sell it for 94, we make 4% or $400 for our work in securing a buyer, going under contract, managing the transfer and getting you closed. The larger the credit, obviously, the smaller that broker fee percentage wise gets squeezed. But yes, the difference between the net price that's quoted to the production and what the buyer pays. And we typically earn that from the buyer. We charge them and they pay us, rather than you guys having to get your money and then write us a check. We can do it either way, but typically the buyer pays us.
So another question about the whole credit limit and time frame. So someone's asking, is the annual credit limit time frame of July 1st to June 30th? Does that refer to when the production happened? Does that refer to when the audit was submitted to the tax credit office, to the film office, or when the credit's actually issued?
So it goes to with the exception of this year, because we've started in February, we allowed productions going backwards to January 1st. Moving forward, it is going to be on the application and your run date. So the cap, the $2 million goes from July 1st to June 30th. So if you've got a production in July 4th, that's qualifies for that next fiscal year. That, you know, we're currently in fiscal year 2026, right? And so if you apply in May for a production that's opening night is in July, that will count in that fiscal year's July to June 30th fiscal year plan.
Right.
And someone asked a question about tiers. Megan may have somewhere in her documentation. I have it too. I just don't have it off the top of my head, and I don't want to be incorrect. Of the $2 million, partly because it was so late, there was probably $500,000, $600,000 left on the table. A couple of tiers have completely used up all their credit. Some tiers have a little bit left. I just saw that question. Megan, I know we've shared what tiers are what, so yeah.
Yeah. Let's see. Someone's asking about out-of-state artist fees eligible if they're performing in Illinois. They have to be an Illinois resident. Like
Yeah.
Dorina said, you have to be able to provide one of those examples of Illinois residency.
Yep, we definitely
Um,
found that out the hard way. Yeah.
Yeah, with Danville being right there on the border, that's kind of tricky, I would imagine. So, yeah. Let's see, is there a way we would know if the tier is used up before we prepare a report and engage the auditors?
I guess you could ask us, but that's rolling. So, you know, you ask us
Right.
today, it may be different tomorrow. You know, it's rolling. Again, you know, you don't lose your place in line. You know, I mean, you will, you know, you apply, you may not get, if that tier is used up in this fiscal year, you know, you can say you'll be in line for the next fiscal year and get the money. So don't hesitate to apply. You know, I've said this too. You know, when I went to graduate school, I was nervous about getting in. My dad said, "You're not going to get in if you don't apply," and so I applied. You know, and believe it or not, they lucked out and let me in, or I lucked out and got let in. But yeah, you got to apply.
Yep. Some documentation questions. On the diversity form, do you need original signatures or can they be Adobe signed?
I'm going to defer to
And
Dorina on that one. Yeah.
So basically, since the actual film office and theater office, they handle the diversity component, we handle the financial component, but electronic signatures, you know, I've seen, because I still see copies of the diversity documentation. So electronic signatures, you know, are acceptable also.
okay.
Yes.
And do you need original documentation to be sent in or can things be PDF?
Well, yeah, please no paper. So for us, our firm, so I used to speak to our firm, we're basically totally electronic. So, you know, we basically share a portal, you know, with the applicant, you know, once we have, you know, the engagement set up and then invite them, you know, so that they can upload all the documentation. And, you know, we prefer it to be in a particular way so that it expedites us being able to complete the review and then ensure, you know, we have all the information, but everything on our end is electronic. And then we send the paper to the film office. So yeah, so
There you go.
yeah.
Okay.
We're getting
Okay.
there. We're getting there. So yeah.
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 Megan,
Um,
I need to step out for like 2 minutes. I'll be right back.
okay.
Yeah.
Um, so we'll make sure and direct all the questions that we have to the rest of our speakers. So, Dorina, would you mind once again just saying what are the 4 different types of ID that are acceptable?
A valid Illinois driver's license, state ID, firearms card, or marijuana card. And they have to be valid prior to the start of production. So meaning it can't be expired, and before, for that particular individual. So, their starting date is June 1st and their ID needs to be issued on or before, the 1st. And so those are the only 4 IDs, and because we get that all the time. And they were, what about? No. And then
Mhm.
if it's a minor, then that's the only exception. If there's a minor, because there are a lot of minors on like some of the film productions, then they can actually produce like a student record, from their school report card or something like that, or a doctor, medical record. But the school or the doctor also need to be located in Illinois, and that information needs to be evident on the documentation
Okay.
for the minors only. So yeah.
Yep. Another question for you, does prorated cost of utilities related to a production qualify as an eligible expense?
For the rental venue, I'm assuming, or
For the
theater.
venue, probably rental or even owning it. So the
Yeah,
cost of the utilities to do the production, that little
yeah.
piece of their expense, is that eligible to include?
Yes, and I think just had that question come up recently. So it's prorated, based on the time of the production. So if it's a month and a half for the production, then a month and a half, would be allocated, to those costs.
Okay. Let's see.
And that's including rent too. So if there's a rent, but then it's not, so it's got to be allocated based on the percentage of the time, for the use of the production. So if everything during that period was for that production only, then that would be allowable, but it was just be for that, portion of the production.
Yes, okay. Um, and knowing that you do a lot of this work, so if there's a lot of applications coming in and your stack is way too high, Dorina, do you know of other CPAs who specialize in doing this work?
Um, I do work even on the film side, so, I give
Yep.
referrals, and so there's another CPA firm, and there are other than also there is a on the Illinois production guide. There is, and that's used for the film, but I mean, it still would be applicable, for some of the, positions and occupations listed there. You can actually go to the Illinois production guide, and then that's basically how you would find Kenny. You would find myself because you go to tax
Mhm,
credit broker. You can look up, CPA firms. You can look up
mhm.
location managers. So that's a good resource. And it's also good if a person's interested to even register, themselves, for the services
Yep.
that they provide. But that's a good one. So, but yeah, so there are other CPA firms other than us that are listed there, as well. So, yeah.
Yep. And folks can also come to our help desk and I can try to connect you with resources. We've been trying to maintain a
Yeah.
list of CPAs as well.
Mhm.
Another question for you about other indirect expenses. Venue supplies, salaried staff hours, are those all considered to be eligible?
Basically, you mean like just any of the crew, any crew position that's related to the production, as long as the individual is Illinois resident, would qualify. And then like some of the vendor type expenses were just basically what Peter and I said, equipment rental, set deck location, the bigger expenses like that, prop rental, all of those would be qualified if they're provided by an Illinois domiciled
Yeah.
vendor. And then, and then the only other category that's even, presented on the report that we submit other than crew expenses is vendor expenses and then petty cash. So that would be smaller items, for craft services, some McDonald's or, some meals and things of that nature. And then just so people do know, Amazon purchases. So if there are certain supplies that you want to purchase on Amazon, you can use Amazon, but basically you have to make sure that, the seller is Amazon.com Services LLC, because third-party sellers on Amazon, those purchases are not qualified. So that's a big thing because ultimately, Amazon has facilities here, but to recognize about is that the seller is Amazon.com LLC.
Wow, that's really good to know. I think but the sense that I'm getting, and this is from what fielding questions in the help desk, is because a lot of these smaller theaters, like with Andrew's case, they've got a lot of volunteers, or they're really kind of operating on a shoestring budget. Folks are trying to figure out how much they can recoup from their
Yeah.
production costs, and is this worthwhile to them? So I think being able to really understand what the full scope is of eligible expenses, and my recommendation is that you work with your CPA that you have, and we have all of the materials to share with folks of here's what's considered to be eligible expenses, here's what your CPA needs to do the audit, so that I would say, and Peter, you can let me know or not, I'd say try to be as broad as possible in your expenses that you're considering to be eligible, and working in partnership with your CPA, they'll help you figure out what the actual dollars are.
And this is all new for many of you, and it's just going to get easier and easier and easier. You're gonna, next year, your next application is going to be easier than the first one. Your third one's going to be easier than the second one. You're going to have a handle on what it is. Hopefully, we can expand the cap a little bit, so that will make the money flow a little bit faster. And the fact that now we're rolling, as opposed to just had that 6 month period of time to cram everything through. It should be easier every step of the way.
Yeah.
And then Megan, just so you know too, just to add, there are like on the film side, talent is included, but on the theater side, it's not. But then one expense that's definitely not included on the film side that is allowable on the theater side is marketing. So and advertising, so your printing for your program books, and things of that nature. And then, like if you, in print, if you do advertising in print, for the production, or even on Meta, Facebook, whatever, because they actually do have an Illinois location, so those things can also be factored in as you try to determine your budget and whether you reach the qualified, the minimum qualified spend level. So, and then like as Peter, I agree, as you defer, the second and third one is easier than the first one, and yeah, and then just, understanding those things. Yeah.
Yep. Yep. So Peter, wondering about the tiers system and how much has been sort of still available for certain tier levels. Like we've talked a little bit about how the higher level is booked out for the next couple of fiscal years, but for the lower ones, how does that work if the money wasn't already kind of spent out
So
before
it
and going
will go
forward?
back to it's still $2 million. So it's not, we don't carry it over. So in one of the lower tiers, there's $225,000 available for the lower tiers, and 250. Again, it's too hard for me to find the breakdown right now, but July 1st, we reset the clock, but we do know that the biggest tier has already got enough applications in to have used up their $700,000 they're allotted for they're following, for this fiscal year. But
Yeah.
the others should be pretty good. There might be one, like the next to top tier might be might be
Right.
booked too. I don't remember. There are two that are fully booked. But the
Yeah.
smaller
Yeah.
tiers, you've got $225,000 left.
Right. So the smaller to mid-tier theaters,
Yeah.
if any of you
Yeah.
guys are online or viewing this, strongly encouraging you to go after this because the funding is still there for you to access.
Yeah, the
Um,
tiers once more. Let me pull this back up. Let me see if I can share again. Let me get to that right page.
While Peter's pulling that up, you can also see the tiers on the DCO website about the program. I'll go ahead and see if we can grab that and drop that
Well,
link into
I
the
have
chat.
to, I just requested to share. It was,
Okay.
yeah. Are you seeing the right thing? Yes, I think you are.
Yes.
Okay. So 25,000, on the left here, it's operating budget. And Megan, you have this PDF, you can send it out to the list and you'll have all of this stuff. Okay.
Yeah, we'll be making these slides available, and we are also recording this program. So this is going to be available for folks in the future, be able to access the information. I am going to pop into the chat for everyone the link to DCO's website about the program. I think we have come to the end of our questions. So anybody have any last words or comments or tips or things to share with the group?
I do. As one of, I think it was Kenny that said it, so I just want to reiterate, and and Peter too, what they might have indicated already. Illinois definitely has one of the best film tax credits in the country, and then I think now the live theater credit is going to be on track as well. To be extremely successful, and so I would encourage everyone to just get as much information as they can. Because I need to come see a lot of these plays. I want a theater tour now, so. But yeah, I think it's just and then understand once you really have a better understanding of how the tax credit works and how it can benefit your organization and everything. It's just been, I know, because Kenny and I both have been on the ground since like the beginning, so we've seen the growth here in Illinois, in terms of how the film industry has exploded, since back in 2008 or something like that,
Mhm.
And so I would just encourage you to just get the information that you need, working with Megan and her team, and then film office, Peter and his team, and then us, as a resource, and then your peers, because Andrew, he came through it. We were all kind of stumbling through the project. It was very new to all of us at that point, but then it's completed now, and he's on the other side of it and ready to make some more. And I will drive to Danville, Tanisha and I. So, but yeah, I would just encourage, because it's an excellent, excellent program, and I, from the film side, and I see the theater side basically falling, in line with that as well too. So that's what I just wanted to add.
Great. Kenny, as the broker.
Yeah, just on a personal level, I'm really happy to be here today, and thank you all for including me. We're available as a resource anytime. If questions come up, we don't charge to consult. We're always here and happy to help, especially knowing, you are all in the non-for-profit space. I know how hard it is to get through a production without running out of cash. I come from that arena years ago in my previous tax credit days. As a pianist, I've done some musical theater as well. So I relate to all of you, and if there's ever any questions that come up, or you just want to learn a little more, I'm always here to help share information.
Great. And Peter, any final words
Oh,
from the
thank you.
film
Again,
office?
just apply, and if you have questions, contact the live theater email or me directly, and we are here to help. I mean, Caroline and Caesar, and whoever we're about to hire will be happy to help you, as well as me. Okay.
Thanks. Well, I want to just thank everybody again for joining us today. And if you have other questions about this program or about other programs or other funding opportunities, or if you want to reach our new Creative Worker Help Desk, you can reach us at artsalliance.org/support. That link should be getting popped into the chat. And just to let folks know that Arts Alliance is a membership organization. We are pay what you can, but support from members really helps us provide programs like this webinar. So you can become a member at artsalliance.org/join and help us in this work that is always interesting and challenging and fulfilling in many ways. So we will be providing a recording of this program on our YouTube channel and on our website, so you'll be able to access this in the future. And for folks who are asking about the tip sheets that we've put together on this program, you can come to the help desk and I can provide you with PDFs of both tips on the application and tips on doing all of the important documentation to get your tax credit. So just to close it out, thank you everybody, and hope you all have a wonderful day. Thanks.
Thank you.
Thanks.
Thanks.
Thanks, Megan.